Welcome back, ladies and gentlemen. My name is Joshua Castillo. If this is your first time seeing my channel, I'm a value investor. I really enjoy value investing, both on the investing side and on just learning from new investors. I really think the most important thing is to continue learning. So in the spirit of that, we're gonna be taking a look at KLA Corp today in this video, but really the goal is I wanna explore the industry as a whole. So not just semiconductors, but also the equipment and the equipment manufacturers and the people involved in the actual processing and manufacturing of these semiconductors, CPUs and chips and things like that. So if that's something you're interested in, make sure to click the like and subscribe button. I'm hoping to go through a bunch of different companies, so stay tuned for that. Stay subscribed, hit the notification bell, so that way you don't miss a video as I keep coming out with them. I have like a couple of pieces of research already loaded because I've read through some of the reports, but I just need to put it in an actual format that people can read it. So with that being said, we're gonna look at KLA Corp today. Again, I don't have any shares in this company. Anything I talk about today is not financial advice. It's just I want to explore this in a video format, so that's what I'm doing here on YouTube. And I was going to buy this at $250, $260. That's what I have as my intrinsic value for me. But I wasn't prepared when it actually dropped to that price a couple of months ago. So today I'm sitting on my hands and waiting, but I hope you can see why this is such an important company to me and why I think that this is going to possibly be something for the long term because of the growth here, and what if we just sit on our hands and wait, we might have an opportunity. With that being said, let's dive right into it. Now, as always, I'm gonna have my girlfriend's iPad sitting right below me, so if you see me looking down or looking to the side or whatever, it's because I'm actually looking at the iPad because I don't have all this stuff memorized, and unfortunately, it's just really technical, so I wanna make sure that I get it right, and there's some things from their 10K and 10Q that I have in here, so I wanna make sure I actually go over these things correctly. So KLA, if you don't know, they basically focus on inspection, process control, metrology, and things like that. And essentially what that means to the lesser person, to you and I, who aren't necessarily semiconductor engineers, is basically they're involved in the process when a wafer or silicon or any sort of chip is getting made and getting processed initially. There's a lot of steps and thousands and thousands and thousands of steps to get it from the base raw materials all the way to the CPU that you might see in a computer today, or memory chip, or whatever you might have. And really what this is this company is part of that process, and it allows companies like Intel and TSMC to create products that actually work and be able to yield a high amount of chips, so that way they don't waste a ton of money. So directly from their 10K, we provide advanced process control and process enabling solutions for manufacturing wafers, reticles, chemicals/materials, integrated circuits, packaged ICs, printed circuit boards, and flat panel displays, as well as comprehensive support services across our installed base. Our suite of advanced products, coupled with our unique yield management software and services, allow us to deliver the solutions our customers need to achieve their productivity goals, including improving yields and reducing waste by significantly reducing their risk and costs, improving their overall profitability and return on investment. So really the important thing is that you need to understand is they're sort of the person that, these companies will go to, and they'll say, hey, I need something in my assembly line so that way I can make sure that these chips actually come out correctly, and I'm not just making a ton of different batches that all get wasted and I have to scrap it all and restart from the beginning. This will allow you to kind of catch the errors as they're happening within the manufacturing process, rather than at the end when you have ICs that aren't working or chips that aren't working correctly. Now, they break themselves into 3 different segments. If you look at the 10K, there was 4. The 4th one was other, and it involved a business segment that they have now sold off. So the 3 main segments, you have the semiconductor process control segment, the specialty semiconductor process segment, and the PCB display component inspection segment. So what the semiconductor process control segment, this is their largest one. It's their comprehensive portfolio of inspection, metrology, and software products and related services help integrated circuits, wafer, reticle, and chemical engineers or manufacturers achieve target yields throughout the entire fabrication process from R&D to final volume production. These products and services are designed to provide comprehensive solutions to help customers accelerate development and production ramp cycles, achieve higher and more stable product yields, and improve their overall profitability. Now, really, again, it's a lot of different types of products. That they sell physical machines. They also sell software alongside those machines, and they also have maintenance and different things that go into keeping those machines at 100% capacity and keeping those machines at 100% workability. So continuing on, within the specialty semiconductor process segment, which includes the SPTS business, KLA develops and sells advanced vacuum deposition and etching process tools, which are used by a broad range of specialty semiconductor customers, including manufacturers of microelectromechanical systems, or MEMS, radio frequency, RF, and communication semiconductors and power semiconductors for automotive and industrial applications. So this is, you're going to see this as I go through the rest of my sort of, I guess, industry overview. The automotive and sort of the industrial applications seem to be a growing segment of the business. Within the PCB display and component inspection segment, which includes the PCB, FPD, frontline, ICOS businesses, KLA enables electronic device manufacturers to inspect, test, and measure PCBs, FPDs, package integrated circuits to verify the quality, pattern the desired electronic circuitry on the relevant substrate, and perform three-dimensional shaping of the metallized circuits on multiple surfaces. Now, this is all a mouthful, and everything I just went over, I'm not gonna go like crazy in depth on what each of those things mean. If you want to, look it up, be free to. But really the important thing that you need to know as someone that's just looking this as an overview is that they're basically involved in every single step of the inspection of different sorts of integrated circuits, chips, semiconductors, along those lines as kind of like a general point of reference. If you want to look further into it, there's a ton of different resources and things that they have actually put out on KLA's website to understand this a little bit more and understand where it actually fits in. If you go look at the Substack article that I also put out, I linked some other stuff in there as well along the way within the article. So if you're interested in that, make sure to take a look. Continuing on, I'm going to show you just sort of what the segments look like overall as far as their revenue for the 10Q, and then for their 10K that they put out back in June, you can see that as well. So the 10Q and Q1 10Q is, their fiscal year ends in June 30th, 2022. That's when it ended for 2022. So their fiscal year ends in June. So Q1 for them is September 30th, 2022. So the semiconductor process control is obviously going to be their largest piece of the business, along with their specialty semiconductor process, and the PCB display component inspection is one of the smallest two in the business. And you can see obviously that I'm going to talk mostly about the process control because that's the largest part of their business and it makes up the majority of their revenue. So when the growth happens, or if any downside happens, it's going to be in that segment the most. So when I talk about this, it's going to be more focused on process control. Now, looking at their 10K, you're going to see that overall, over the last 3 years, what those numbers actually look like. You can see just from 2020 to 2022 on the semiconductor process control side, it went from $4.7 billion to $7.9 billion, and that's continuing to grow today, which is completely amazing that they're able to do that at the growth rate that they're doing it, especially given the market that they were in. Even the other segments you can see as well, they have had some growth alongside that, albeit the numbers isn't as large, obviously. So overall, you can see their revenues from reportable segments in 2022 is $9.2 billion, and then in 2020, it was 5.8. So some good growth, almost a double over a couple of years. I'm imagining in 2023, we'll probably see them double that original 2020 amount. Now, as I mentioned, the other segment that you see here on this screenshot is actually no longer part of the business, hence the zeros on the revenue side, but the other two, pieces of it had it. And what they did is they sold part of their non-strategic solar energy business. They sold it and got rid of it, and that's really what was falling under other. So they decided now that they only need 3 reportable segments, and obviously if they add in any more businesses, that may expand. But taking a look at all this, I think the growth in the business kind of speaks for itself. The growth in the segments also speaks for itself. So let's dive right into the rest of it. Now, the total revenue, the last 12 months as of Q1 2023, is $9.852 billion. You can see the ramp up over the last couple of years, and obviously these are the trailing 12 months. So if you look at this, each column is the trailing 12 months. So it's not each quarter is 9.8 billion, it's each trailing 12 months is 9.8 billion, and so on as it goes down if you look farther to the left. But the growth rate that they have been operating on ever since really 2019 has been immense. And I mean, it cannot be understated what they have been able to do with the business. But to have 9.85 billion when they only really had just under, 2.5, 3 billion back in 2016 is completely awesome. And this has been a growing business, unsurprisingly. Now, the profit margin has been floating anywhere from 20 to 30% The profit margin has kind of been up and down all over the place, especially over the last couple of years. But really, if you look back on everything, you've seen some crazy growth in the gross margin and the profit margin, and then you've seen it kind of decline and then grow again. And you're going to see this a lot over the course of looking at this whole industry as a whole, because the semiconductor industry is very cyclical. It goes up, it goes down. Costs go up, costs go down, requirements and things like that go up and down, as well as what people are buying. So right now, a lot of companies are investing into their infrastructure, investing into different machines, and so they need KLA's machines to be able to build out their foundries and other things like that. But I'll touch on that a little bit later. Continuing on, you can see their current PE is about 18.91. Obviously, this has been an up and down depending on when you look at it. I think it was just shy of 10 not too long ago. And obviously, as this moves on, we'll see what it actually ends up looking like. But you can see the price and how it's, gone up and down so much. But back in, not that long ago, we were at just below 250, 260. And if you go back a couple of years ago, we were actually almost below 100. And if you go all the way back to 2015 on the screenshot, we were well below 100. So it's crazy to see, over, let's say, from middle of 2018 till now, we've probably had a little bit over $300 per share added from that $100 starting point. So it's crazy to see that kind of growth, and along with the fact that they've been repurchasing less shares and adding dividends into the mix as well. Now, their enterprise value to EBITDA, 14.39, current cash as of Q1 2023, 1.819 billion. Now, if you look at current cash and you look at cash and cash equivalents like on Yahoo Finance or something like that, they tend to combine marketable securities and current cash and cash equivalents. I decided to separate them out because not every marketable security on every company is an actual cash equivalent. Some companies treat it that way. This company may not be one of those. So I decided to just, list the cash, not include the marketable securities. But if you go on like Yahoo Finance and see something different, that's probably why. Now, the long-term debt as of Q1 2023, 6.312 billion. Now, that's down just a tiny bit from June 30th, 2022. So from when their 10K was released, it's down ever so slightly, but it's something I will touch on just in a little bit later. But I just wanted to point out, this is what their debt is currently made of. A lot of long-term notes that are going to be expiring years and years and years down the line. Nothing too close to now that's actually going to be expiring. And again, given the interest rates and where they were when they were issuing these, you got to take advantage of low rates. Don't blame them for that, but we'll touch on debt here in just a little bit. Now, the last piece about the financial section, the company has been repurchasing shares and issuing dividends, and they've done a lot of that with their free cash flow over the last couple of years, especially because of the fact that they've made a lot of sales, really. So they have been able to capture this and actually, take that free cash flow and buy back more stock, take that free cash flow and give it out to the shareholder. Now, their goal based on their investor day back in June 2022 is actually they want to pay out about 85% of their free cash flow to their shareholders. So that'll be a combination of, either doing a tender offer, repurchasing shares through the open market, or giving out a dividend. Now, I'm going to throw a screenshot up here and show you kind of what their capital allocation priorities are. But to give you an idea, so as of September 30th, 2022, an aggregate of 3.14 billion was available for repurchase under the current stock repurchase program. And they issued a lot of repurchasing over the last couple of years. So to have 3.14 billion left is pretty great. But as you can see here, you can see what the percentage of that $14 billion has been as far as capital allocation priorities. So in 2019 to 2021, R&D was a big leader, as well as acquisitions. And then they really didn't focus too much on the dividends and share repurchases as a percentage of that. But if you look at 2022 to 2026, they're estimating about $38 to $40 billion. A big piece of that is going to be share repurchases and dividends. So that 41% is going to be share repurchases. The next 12% is going to be dividends. And then they're also going to have 19% is what they're looking at for R&D. And really, again, as I mentioned, it'll come down to what are they actually going to look at? What do they want to do? And I kind of talk about the leverage and what they're willing to lever up to in a couple of minutes. So don't be too shocked there. But just so you can see what their dividend looks like today. So their dividend is forward, their forward dividend is about $5.20. Today it's about $4.70. Now that's annual. You can see their growth rates over the last year, 3 years, 5 years, and 10 years. To have a 10-year growth rate of 12% is kind of crazy. If you think about it, if you bought back 10 years ago, your dividend has grown at 12% per year over the last 10 years. That's amazing, especially the stock price is obviously appreciated as well. Current yield forward, the current forward yield is 1.24%. It's a little bit lower today given the stock price and where it is. Now, overall, the financials, I like what I see. I'm going to talk about the debt here in a little bit, but jumping into the industry so you can get a better overview of the process control side of the business. I'm not going to jump in too much to the other two segments because I don't think that the revenue isn't as significant for that. So, if you see any sort of up or down, it's more of their growth segment rather than, stable business that they're currently working with. But the industry as a whole can be understood like this. So the market for the semiconductor manufacturing equipment is expected to grow in response to rising consumer electronics demand. Not really that shocking, and just the general growth in technology in general. The growing demand for semiconductor chips from producers of electronics, medical gadgets, and sensor systems is driving the semiconductor industry forward. Expanding middle class and changing lifestyle preferences and a growing desire to use smart electronic devices are among the key drivers driving consumer electronics growth in the recent years. This indicates that the market for semiconductor manufacturing equipment would rise at a rapid pace over that forecast period. However, tiny dust particles have an impact on the overall semiconductor manufacturing and fabrication process, which requires the use of a clean environmental and clean equipment. Furthermore, production faults because supply delays and might result in extra losses in the form of order cancellation and client shifts to other suppliers. Because there are several patterns on a chip at such a small size, pattern complexity rises. This necessitates a high level of precision in order to convey accurate data to the chip. With the demand for size reduction and the high density of semiconductor devices, the complexity of wafers has increased and resulting in a drop in laser wavelength. Furthermore, during the forecast period, the semiconductor is expected to grow at a CAGR of more than 5%. This is attributed to the increase in mobile and consumer electronic device sales over the forecast period. New technologies such as the Internet of Things, connected gadgets, ultra-high definition TVs, automotive automation, and hybrid laptops will continue to fuel demand for semiconductor processes and control equipment. This means that the industry will probably grow from $6.4 billion in 2020 to $10.24 billion in 2027. Now, this is what they're estimating. I figured that, something of a forecast would probably be helpful, but really what you need to understand is that, the industry is going to probably grow at anywhere from $6.4 to $10 billion, and they expect it to grow to about $10 billion in the next few years. It could obviously go way over that if we ramp up a lot of things. I think that the supply chain crisis that we've had in the semiconductor industry will clear up eventually, and we won't run into as many issues. But really the key piece in all of this that you can understand from KLA's point of view is that semiconductors are needed within each device that we have. And so for them, there's inspection and different things that go into creating the chips that are in these devices. So as that continues to ramp up, especially the complexity of these devices, you're going to see more and more things actually come from KLA going to these businesses to generate more and more chips of higher and higher complexity. And it's kind of just like a constant loop upward where the complexity increases, need for inspection, things like that, it's more needed. That allows the complexity to keep increasing as more and more things get designed. So I'm excited. One last thing I want to talk about on the industry side is the industry market control and market share that they currently have. So market leadership is measured by market share, and KLA actually has about just over 50% of the market in the process control field. Obviously, there's different things within each business segment that they may have more or less market share in, but overall, on a process control point of view, they have almost 50%, if not more than 50%, depending on when you look at it. And really, the other companies don't really compare in this field. So if process control, the way that it is today, continues to be how it will be in the forecasted period, you'll see some great growth in the companies like KLA who have dominant market share in this space. If new technology comes out and KLA can't keep up, obviously there will be some differences in the outcome. But let's talk a little bit more so on the strengths and why I think that KLA is set up correctly today and they can continue chugging along going forward. Now, the first strength that I wanted to touch on is actually like the capital investment and the moat of this current business at KLA. So the capital investment required to buy these machines for companies is quite a bit. And it really relies on the fact that as companies move forward with their complexity and they build out new foundries, they build out new IDM manufacturing processes and manufacturing just facilities. So something like TSMC's investing a ton of different TSMC is investing a ton of money into Arizona to actually build out a new foundry and be able to use that space to generate chips for companies like Apple, other companies like AMD, to be able to do it within the United States. But to build out that foundry, you need machines from KLA, you need machines from other equipment manufacturers to actually have a functioning foundry. So when you look at things like that and you look at companies like that, they're gonna benefit as the semiconductor becomes more and more globalized rather than just being held in China or held in Taiwan. Now, as they build out more, you'll see companies like TSMC and Intel now who are building out these foundries, and that capital investment is very hard for them to go and make another decision after they already have the equipment. Once they have it, it's really hard to get rid of, and that's the best piece for KLA, is they can just keep servicing and upgrading that equipment rather than needing to compete with new companies and new incomers who are gonna try and beat them out. Because a lot of what KLA does, it does help on the leading edge of technology and that bleeding edge of technology that we always hear about on the news. But on top of that, some of the other non-complex chips, like things that go into calculators and things like that, don't necessarily need KLA to, build out this crazy brand new complex machine to be able to analyze everything. It can just use some of its old equipment or sell its old equipment to companies like that. So that way they can still benefit from KLA, but KLA now has a piece of that assembly line so that they can keep getting maintenance and different contracts and things like that to keep that machine up. And really, one thing else that I want to mention is that if you have a company like TSMC who's getting really, really good yields, and KLA is a part of them generating really good yields on semiconductors, why would they go mess that up? Why would they go out of their way to change out something just to test it when KLA is clearly the dominant person in this space and they control a lot of it? And the thing is as more companies use KLA's machines, they get more and more data. KLA gets more and more data from them. They get to understand, how do we troubleshoot something? And now it's kind of like a flywheel effect where a company buys it, they do all the work, they find all the issues, you go to fix it, you troubleshoot, and then you're able next time around to fix it a lot faster, and then more and more companies continue to use your machines because you seem to be getting better and better and better and more efficient at when you send out to engineers or things like that to fix things. Now, as I had mentioned on the second strength, one of the best parts of this business is actually the continuous maintenance and continuous service that you'll see here. So I'm gonna pop a little screenshot up here, and really the whole mantra, if it ain't broke, don't fix it, really applies here. So you can see that 50% of the installed base is older than 18 years, which means they have been maintaining machines that are older than 18 years. That's half of their installed base currently. And the nice thing is you can see here what this install base actually looks like, and they give you what years these things were sent out and what years they were made. And I think that it's crazy that 80% of the tools shipped in KLA's history are still remaining in production today. Now, again, as complexity increases for items, some of the old machines might be sold to a company that makes a lesser complex chip, like a calculator chip or something like that, where having the bleeding edge like a CPU isn't necessarily needed in that capacity. Now, I think that the best thing about it too is that when companies buy these big machines, they have a huge CapEx spend that gets depreciated over the lifetime use of the company or what they expect. But the way that KLA maintains, the way that they service, actually allows them to keep it beyond that and be able to still use these machines even beyond the depreciated life of the machine, because of the fact that the way that the machines are built and the way that process is dealt with, you get a lot of lifetime use out of these machines. Now, one of the things that I saw them mention in the Investor Day presentation, I've seen them kind of talk on it in the earnings calls, as well as a couple other things that they have sent out, is that they kind of expect service revenues to kind of overtake being able to sell the machines. So, because you think about it, you get a sale price for the machine because you're one of the top people, if not one of the only people, who do process control on the bleeding edge. So you sell them this machine. They work on whatever node they're on, node 7, node 5, node 3, whatever they're working on. You sell them a machine that helps them with that. And then, let's say you're bleeding edge node 3, node 5, and you're still in the works with TSMC or Intel on these items. Now, all of a sudden, you're kind of like their go-to person who they need, and you get to develop that technology, the newer technology, for your own machines, which you then can use, assuming there's no patents or any issues like that. You can now use that knowledge and expertise to build out better and better and better machines. And honestly, again, it's like a flywheel effect. I think that KLA has a really good business model as far as what they're doing, and the fact that they sell machines and then service on top of that and charge for that service and charge for that maintenance is a great business model, and I like to see it because it's a necessity, not like a want for a lot of these businesses. Now, going on over to the weaknesses, obviously there's more strengths than what I talked on, but if you want to look those up, just go through the 10Ks, go through the 10Qs, and see if you can find some of the other strengths of this business. Go through Investor Day. That was one of the most helpful things to me. Now, the first weakness that I want to go over is actually going to be where their revenue comes from. Now, I'm going to pop up a segment geograph here, and you can see that overall 31% of their revenue comes from China, 27% comes from Taiwan, and 15% comes from Korea. Now, there's nothing wrong with Korea, but for China and Taiwan, there has been quite a few different things that have happened politically over the last couple of years that have really made, a sour taste if you're looking at this company. And it can get a little dicey depending on which way the US decides to go, especially with China, because China makes such a big portion of their revenue, and it's 31%. So to have anything mess with that part of their revenue is quite a big hit. Now, the thing that happened is that back in October 2022, the BIS sent out a letter or memo basically that said that there's going to be new restrictions put on advanced chip technology, and that these companies like KLA, NVIDIA, and other things like that would need to get basically a license to be able to sell to China and or any Chinese companies. Now, this didn't exist originally, and it could put a lot of delays on the different backlogs, and KLA has estimated that their backlog of Chinese, goods basically is anywhere from $500 to $900 million. And so to have that sort of impact that could possibly happen is a little scary to me, but we'll have to see how this plays out. They're not exactly sure what the impact, like long-term impact, will actually end up being. And so we'll have to see what the expenses are that are related to that, or any sort of, charge-off or write-offs or anything that ends up happening because of that licensing process. Or, maybe the US government bars them from allowing them to work with a certain company in China. So we'll have to see what that actually looks like, but that was kind of one of the most shocking things that happened. And again, the backlog $500 to $900 million in year 2020, fiscal year 2023, or calendar year actually is what they had in 2023. So we'll have to see what that actually ends up looking like, but it's a weakness nonetheless. Now, the other thing that I wanted to point out is the sort of continuous R&D and improvement and things that need to happen at a company like this. Now, this is why Warren Buffett and people within that sort of Warren Buffett ideology don't necessarily invest in technology companies, because they see a company like KLA, it's very complicated. The stuff that they send out and the equipment and all that stuff is very complicated, along with the fact that the sort of need for R&D and investment and improvement into your processes, into your staff, into just different aspects of your business is continuously needed because of the fact that they're operating at the leading edge. So if someone else jumps in front of you, that's going to be a huge issue down the road. So it's really important for KLA and other companies within this industry to stay at the top of their game. And really, it all comes down to what part of the semiconductor cycle are we in. Unfortunately, this is a very cyclical business and cyclical industry as a whole. It's not just the business's fault. But it's important that when we have the highs, that KLA and other companies like this are able to capture that and better themselves, so that way they can face the lows in a better position than they would have been into otherwise. But really wanted to focus on here is that you can see the R&D expense has increased along with the revenue. So you can see, I'm going to pop up a screenshot here. You can see that the revenue as of today, or as of 2022, is 9.2 billion, and the R&D expenses was about 1.1 billion. So, but you can see over the last, decade, 2 decades, what that actually looked like. And as the revenues dipped, obviously the R&D has also dipped, but as the revenue has increased massively, so has the R&D. And really, again, it relies on the fact that the company needs to spend to be able to continue being at the leading edge, continue to hold that market share. So you have to kind of weigh the pros and cons of, are they going to continue to stay at the leadership level of this market? And if they are, how much is that going to cost? And that's really what I wanted to point out on the weakness here, is that it works when the company is doing really well, like it is doing right now, and it's growing a lot. But on a downturn, what do you think that looks like? And obviously right now we haven't had a downturn in this business in quite a few years. So what will that look like in the future? I don't really necessarily know. And I think that part of that is going to need to be built into that margin of safety at the end when we do the intrinsic value. Now, the last thing that I wanted to mention is the debt. Now, the debt is more so something that I wanted to mention in terms of I would take a look at this. If you haven't seen this before, I would take a look at it, try to understand where they're at, what this looks like, what the interest expense and all those things are, but with kind of a brief overview of the debt. And what I think that I'm focusing on is actually the debt level to EBITDA or leverage ratio. So right now, the total debt, or really the long-term debt they have mentioned, divided by the EBITDA as of Q1 2023 is about 1.44. Now they're targeting 1.5 to 2.0, so that's total debt to EBITDA. They're targeting 1.5 to 2.0 kind of long-term over the next few years at the very least. But I think that if it was me, what are they using that debt for? Because the thing is that when you have downturns, the debt is great for making acquisitions. It's great for making capital allocations that you need when things are cheap. But if you're just using debt to buy back shares and debt to pay off dividends and things like that, I don't think it's really worth taking out debt for that. Now, granted, they have been able to make returns above all the interest rates that they currently have on these notes, but that doesn't mean in the future that that can't be an issue if that's a habit that they're going to get into. From what I could see, they're using a lot of debt to be able to purchase things and buy acquisitions from that capital allocation strategy. But there was some notes on the most recent 10Q and 10K that mentioned that they used some of the notes, the outstanding cash they had from the notes to be able to repurchase shares and issue a dividend and pay for that dividend. So for me personally, my investing, I look at the debt and try to understand, okay, what are they doing with it? Their allocation and what they're trying to do in their leverage ratio, it's below what they want. So sure, that's fine. Their target's 1.5 to 2.0, but if they're using debt to buy back things and do payouts, I don't necessarily think that's the best use of that cash. But if they don't see a return other than that, then so be it. But I would like them to look at businesses and continue growing their own businesses rather than paying out that cash. So we'll have to pay attention to that and see what they think they can do. I believe their target for the revenue side was 9 to 11% growth rate over the next few years as well. So that might come along with it. And obviously if their earnings stay where they are at now, that would be awesome. So we'll have to see what it all looks like, but it's something I wanted to point out nonetheless. Now, moving on, the intrinsic value, this is the last piece of the company and the business that I wanted to point out. The intrinsic value, this data is updated to today. So when you look at the revenue, just think what you've seen throughout the rest of the video, this revenue is kind of at the top of where it has been in the past. So do you think this revenue will sustain? If not, adjust the DCF accordingly. The link is in the Substack article if you want to go play around with it. But if you think that they can continue growing, obviously you're going to see what I'm going to show you now. So with that being said, diving right into it, the current outstanding shares, 141 million shares. Current revenues, 9.8 billion. Their market cap as of today was 59 billion. Their current share price, $420. Their fair value that I have calculated is $343. You can see why here in a second. So when I look at the revenue growth, the low case, the worst case scenario for me, I think 5% for the next 7 years is probably doable. The high case for me is 10%. So I went on the low case, I went a lot lower than what they were targeting. On the high case, it's about the middle range. And then obviously the middle case or the base case, I have about 7%. Profit margins, 25%, 27%, 30%. Free cash flow is not too far off of that either. The PE and price of free cash flows, they seem to fall in line with each other, so I just did the same for each one. And then my discount rate's 12.5%. Usually I use 12.5% for a lot of different businesses, but I take a look at the WACC. I just Google what their WACC is really quickly just to see if I'm in the same ballpark. If the WAC is significantly higher or way higher than what current discount rate is, I'll use that instead. But the discount rate for me, 12.5%, doesn't seem to be higher than a lot of companies' WACs, but still something to look at. So what I get fair value wise though, $343. I'll also pop up here what the margin of safety may look like. So margin of safety wise, the buy-in price for me, $275 per share at the current, current information, margin of safety 20%, $275. And you're thinking to yourself, why even bother doing this video? Why even bother showing any of this? There's no point. It's not gonna go anywhere, $275 per share. But in reality, in the last couple of months, it actually dipped down to $250 per share because that's where the 52-week low is. And the thing is that for me, I had this on my watch list and I saw it dip and I didn't buy because I didn't feel prepared. I didn't feel ready enough to make a video about this to be able to actually buy, and so I didn't end up buying, and obviously it's gone to $420 a share. But for me personally, the reason I'm still making this video is A, I want to look further into this industry as a whole, and B, it's important to have things kind of ready on the sideline. If something happens to that company's stock price for whatever reason, you can jump in and buy at a moment's notice. So, and it's not like this is the only company I'm waiting for to see if it drops. I have a bunch of other companies that I've been going through on the site here on the channel, as well as just on my own in general. So I'm adding this one to the watch list. I think anything below $275, I'm assuming none of the fundamentals change, anything below $275, $260, where it has traded before in the last year, I think that's probably where I would start adding. And what's sad is I just didn't have time to continue looking into this company at the moment when it was at that price. And now going into 2023, I want to build out my semiconductor knowledge and industry knowledge. And there's some things that I might talk about here where I may not know the full extent of everything. And that's kind of the whole point, is I want to learn more and more about this industry and where these companies kind of fit in. So if you're interested in joining me, make sure to stay tuned. I'm really excited to keep diving into these companies. I have a couple other companies lined up. I own Intel currently. I would love to talk about Intel, Micron, and Teradyne. Those are the other three companies that I want to touch on. And then obviously, once I get through those ones, I'll definitely add to the rest of the WFE and the rest of the semiconductor industry, like NVIDIA, AMD, and all the big ones, and also the small ones. So if that's something you're interested in, let me know down in the comments below. I'm looking forward to making more videos. Thank you for having me back. Happy 2023. Happy investing. Have a great day.